Hello guys, so for those who are price action traders and who prefer using indicators as extra confirmation, now this video is for you because in this video we are going to be discussing how to use the SMI, the Stochastic Momentum Index, to confirm signals gotten from trend lines. So basically in this video we are going to be combining signals from trend lines with signals from the Stochastic Momentum Index. So let us get right into it. As a trader who uses price action, you would want to remember that the trend lines are dynamic support and resistance levels, or rather the trend lines show us dynamic support and resistance levels, right? And don't forget that when you want to draw a trend line, you need to identify 2 points where there was a rejection in price. For example, we can see that there was a rejection here and there was a rejection here, okay? So with those 2 points, we draw our trend line. Now, let us just draw multiple trend lines first on the chart, and then we are going to use the SMI to confirm the signals gotten from the trend lines. So let us draw another trend line here. Okay, let us draw another trend line here, right? Let us draw another trend line here, and finally let us draw another trend line here. Okay, now as for the first trend line, this is a bullish trend line revealing to us dynamic support levels. So after the first 2 touches which we used to draw the trend line, the next time that price came close to the trend line, remember that resistance and support zones are not necessarily single points. That is the reason why they are usually called zones, because price might not get to a particular point before it reverses. So although we used 2 points to draw this trend line, price might not get to the trend line exactly at a particular point before it reverses. So long as the price of an asset is already close to the trend line, in this particular analysis we are using the Euro USD, and this is the 1 hour time frame. Okay, so as the price of Euro USD came close to the trend line and we saw, we can go to a smaller time frame just to observe when the price started giving sign of moving up. Okay, so we can see I came down to the 15 minutes time frame, and we can see that while the price of Euro USD was close to the trend line, it started giving sign for a reversal. It started giving sign for a reversal. Now, the reason why we come down to the smaller time frame is to check for when signs of reversals are happening close to the trend line. Then after that, we will go back to the 1 hour time frame because we are entering and exiting our trades on the 1 hour time frame. Okay, so having identified a possible reversal sign on the 15 minutes time frame, we will come to the 1 hour time frame and check if the SMI is curving upwards. So you can see that the SMI confirms that a buy move is about to happen, because you can see that there was an upward curve. This upward curve confirms what we saw on the 15 minutes time frame. Now you might ask, why not just use what we see here to enter our trade? The answer to that is, if you want to trade on the 15 minutes time frame, then use the 15 minutes time frame to enter and exit your trades. You can go to smaller time frames to check for smaller price movements, but your main decisions should be made on the 15 minutes time frame. On the other hand, if you are using the 1 hour time frame to enter and exit your trades, make sure that every decision you make is made on the 1 hour time frame. Your entry, your exits should be done on the 1 hour time frame, but you can go to smaller time frames to observe smaller price movements. Okay, so we had to come back to the 1 hour time frame to confirm our bullish bias, and after getting that confirmation with the SMI, we would have entered a buy trade just after that curve, right? And perhaps we would have exited. Remember that our exit signal, one of the ways we can exit our buy trades is when we see an opposing curve, right? So we will have exited somewhere around here just after this curve began to happen, right? So we would have entered somewhere around here and exited somewhere around here. That would have been about 28 pips. And remember that our stop loss would have been below the swing low. That is one of the ways to set the stop loss. Below the swing low or below a significant support level. This is a support level. You can see that there was multiple rejections. There was rejection here, there was rejection here, rejection here. So this is a support level. So we can decide to set our stop loss below that support level or below. It even coincides. We can see that the support level here coincides with the swing low. So we can set our stop loss just somewhere around here, and then our take profit could have been at the next resistance, which would have been somewhere around here, because we can see that there is a resistance zone here. It's a result of rejections. There is a resistance zone here. So that is one of the ways to exit a buy trade when price gets to resistance, or we can decide to use other indicators to confirm. But in this particular video, we are just using the SMI indicator to confirm our trades, okay? To confirm what we see on the trend lines, what we see on the chart, on the price movement of Euro USD, okay? So we would have either exited at the resistance zone, which would have given us about just 15 pips, or we would have exited after the SMI gives a downward curve, and that would have fetched us somewhere around perhaps 30 pips. Okay, let us go to the next example. Now we see a trend line here. Remember, we are using the SMI for confirmation, okay? So after the first 2 points, which we used to draw our trend line, the third time that price came to the trend line was somewhere around here, right? Now, we can go to the 15 minutes time frame again, just to identify when the price starts giving sign of a reversal. So just to know where we are looking at, let me put this vertical line here. Then going to the 15 minutes time frame. Okay, now on the 15 minutes time frame, we can see that price began to give a sign of reversal around here. Okay, just right after this black vertical line, we can see that the price of Euro USD began to give a sign of a reversal. Now going back to the 1 hour time frame, we can then look at the SMI indicator, and we can see that there was a downward curve happening somewhere around here. So just right after the downward curve, we would have decided to enter a sell trade somewhere around here, and then as for the exits, using the same SMI indicator, we would have decided to exit somewhere around here after an upward curve began to form. So we would have caught just about 6 pips. Not much though, but we would have caught about 6 pips. Now looking at another example, after the first 2 points, the third point, we saw that we can see that price began to consolidate, okay, but we wouldn't have known what price would have done after this part, after this point on the trend line. So we are going to be looking for a sign of a bullish reversal again on the 15 minutes time frame. Okay, now let us go to the 15 minutes time frame to look for a sign of a bullish continuation. All right, now we can see that around just after this, okay, about the point that I set this vertical black line, we can see that price was giving sign of a bullish move. Going to the 1 hour time frame, we will be looking to confirm that bullish move. Now we can see that the SMI did not curve upwards, so this was not going to be a good buy trade. And as we can see that the price did not eventually go up. So now remember, we are using the SMI indicator for confirmation. Now we can see the SMI did not confirm that buy trade, so we will not take that trade. So long as the SMI did not curve upwards, we will not take that buy trade, right? Now let us look at another example. After the first 2 points, this was the third point. Now, without even needing to go to the 15 minutes time frame, we can see that the SMI did not curve upwards. Remember, we are checking after price got to the trend line. That is where we are checking from, right? So after price got to the trend line, you can see that just right after this part, we can see that the SMI did not curve upwards. So because of that, we are not going to enter a buy trade, okay? Now, this is another example. After the first 2 points, the third point on the trend line, we can see that just after price breached the trend line, remember what I said about zones. So this is a support zone. It might not exactly reverse at the trend line. It could reverse before the trend line or after the trend line because it is a zone, right? So watching the SMI indicator, we would have seen that the SMI indicator confirmed this buy. It confirmed it right after the upward curve, right? And we would have entered a buy trade around here and probably set a stop loss below the swing low. We would have set a stop loss below the swing low and waited for another confirmation for an exit from the SMI. Now, perhaps we set our stop loss here, entered our trade here, and exited around here, just right after the curve, the bearish curve, okay? And we will have caught somewhere around 20 pips. Okay, somewhere around 20 pips. So basically, this is how to use the SMI indicator to confirm signals from trend lines. You can use this strategy to boost your trading results. Make sure that you always wait for a confirmation from the SMI when using this strategy. If the SMI gives you a go ahead, you can enter the trade accordingly. But if the SMI does not confirm whether it is a buy or a sell, then just wait until you have a confirmation. So guys, I hope you enjoyed watching this video. Please click the like button, subscribe, and click on the notification bell so that you can get updated on subsequent videos about trading indicators. Cheers guys, and happy trading.